Assalamualaikum warahmatullahi wabarakatuh and good day. Following a strong rebound in the second quarter, the global sukuk market continued to rally in the third quarter and fourth quarter of this year. After delivering strong returns of 6.6% in second quarter, our principal global sukuk fund continues to perform with returns of 5.7% in the second half of this year. Over the last few months, global sukuk prices continued to rally, supported by continued inflows into emerging market assets and rising oil prices. In March this year, the US Central Bank reduced US interest rates to record low level of near 0%. This is to lower borrowing costs and support businesses and the economy due to COVID-19. As a result, this generated strong fund inflows into emerging markets as investors search for higher yields. Subsequently, this triggered yield spread compression in emerging market bonds and global sukuk, which drove prices higher. Another driver which has contributed to the strong global sukuk performance in the fourth quarter is higher oil prices. Oil prices have surged by more than 30% since end October following positive COVID-19 vaccine developments. This benefited Middle East oil-producing nations and drive up demand for their bonds and sukuk. New US dollar bond and sukuk issued by Middle East entities continue to be highly in demand. For example, Saudi Aramco's US dollar 8 billion new bond issuance was oversubscribed by 6 times, while other GCC corporate issuances from Dubai, Kuwait and Saudi were 3 to 6 times oversubscribed. 70 to 80% of these issuances were taken up by investors from US and Europe, with demand skewed towards longer 30 to 50-year maturities. The strong global demand continues to drive a sharp appreciation in global sukuk asset prices. The outlook for global sukuk remains positive as a result of continued fund inflows into emerging market assets which offer higher yields relative to developed markets. Global interest rates are expected to stay low for longer until there are signs of sustained improvements in the global economy. Flush liquidity, coupled with expectations of slower global growth, will continue to drive demand for fixed income assets. This provides a conducive landscape for global sukuk to continue to do well. Demand for global sukuk may remain strong given that the GCC countries now constitute about 17% of the JP Morgan Emerging Market Bond Index. Meanwhile, oil prices will continue to be driven by strong demand from China, the world's largest oil importer. As the first major country to rebound from the pandemic, China's recovery is expected to outpace other countries. In addition, further positive development of the COVID-19 vaccine may result in a broad-based pickup in economic activities globally. Increased logistics, tourism, and travel will further drive demand for oil. On the supply side, oil prices will also continue to be supported by OPEC Plus' ongoing production cut, which is expected to remain in place for the next 2 years. Valuations for global sukuk continue to be attractive, with ample room for credit spreads to compress further, which would propel prices higher. Any market correction will present opportunities to re-enter at cheaper levels. And against this backdrop, we expect global sukuk to continue to provide attractive returns.